And once again, welcome back to the Power Hour. It's 8 a.m. Central Time where we are on this hump day, Wednesday. And of course, we were having this conversation about responsibility, about preparing. One of the things that the elitists out there want to do is tear down our financial system into something that, we don't want, but they don't care. Just like they don't care about protecting us and our infrastructure. They don't care. They didn't prepare. Or they prepared for themselves. They just haven't prepared for the rest of us. No, we're all just going to rot in hell. They don't care. They really don't. This is one of these things that, when we get into the discussion about our finances, one of those things is how you're going to diversify, how you're going to make sure that you have enough food, water, shelter, and the means to engage in the shadow economy or hedge these dollars that are, they're trying to de-dollarize them. There's a hedge out there. Fred Dashevsky with uscoincapital.com. That's capital as in OL.com, uscoincapital.com, joins us. We got some holiday deals going on. Fred, welcome back to the show.
Hey, great to be with you again. Hope everything is going well where you are.
Well, hopefully, yeah, it is where I am. I mean, we're all sitting there responsibly trying to prepare for what might be happening. Our discussion this last hour has been what the potential is for national disaster in this country that could throw our entire economy and whatnot into a tailspin. And Dan Bongino just came out with a warning video about a cyber attack in the United States, and it's already starting to happen.
Well, we are becoming subject to an awful lot of these potential issues, especially as we become, more aligned with having to use technology to conduct commerce. So, I think we questioned the last time we spoke, what would happen to an average American if the electric grid dropped? I mean, for people that do all of their commerce on their phone and through apps, what would you do if suddenly there was no electrical way for you to connect? How are you going to manage? Do you have any substantive form of capital that you can conduct commerce with in a short period of time, even just until things settle, even if it's a couple of days that we're out? But I think the financial structure, the more that we begin to rely on technology, the more we're subject to potential problems.
Good point. And see, the thing is that America lives on electricity. It doesn't run on Dunkin'. I don't care what they say. This is all part of that woke brainwash. And yes, I drink Dunkin' Donuts coffee. All right, whatever. I don't run on Dunkin'. I run on knowledge, Fred, and that's why you're here. So.
Well, I appreciate that. Again, I've been following the trend of a movement of the way money is handled. And I went back and researched it from back when, the United States was first formed in the 1790s. So, we started with the idea that guys carried around physical pieces of gold and silver, and that became cumbersome. So somebody would set themselves up in town and say, I'll tell you what, you leave your gold and silver on deposit with me, and I'll issue these certificates to you. And then you can conduct commerce with these certificates. But it was local. I mean, there was really no big issue. You could walk back to the place where the gold and silver were physically stored and exchange back those paper notes for that physical entity whenever you wanted. It provided a sense of safety, but it was always the convenience. And as we move forward in the decades, I remember when credit cards first became very popular, there was a big pushback for a while about, well, who would use a credit card? People like to use cash. And little by little over the decades, if you talk to restaurateurs, how much of their business eventually became conducted in things like credit cards over cash, it began to shift. And we're always sold as a public with new technology on the quote unquote convenience. That's the pitch. We're sold on the idea that this is going to be easier for you. It's going to make things faster and better and smoother, and you'll have easier records and be able to, buy something at 3 o'clock in the morning on your phone because you woke up and decided to hit the Amazon site. You couldn't do that 25 years ago. But with these conveniences come risk, and everything has to have a balance. And I think that the more, you point out a very interesting problem. And again, I'll say it this way, the more we rely on the technology, the more we are subject to disastrous problems if it goes off the rails.
There you have it. Food, water, shelter, folks. And I'm talking about and see, here's the thing. The gentleman we're on the phone with right now, I got a lot of respect for this guy. I'll tell you why. This guy studied psychology, political science. I mean, that's a man after my own heart because I majored in poli-sci and journalism as well. We studied how the world thinks and how they're manipulated Fred clearly understands that, and he also studied economics. I had my share of it too, and I had a Korean professor in economics, and I'm telling you what, we couldn't understand half of what he was saying because he'd be sitting there talking about paperbacks, and I'm like, paperbacks? He goes, no, paper bags. Oh, I can't understand you because paper bags you're talking about. How many paper bags of something? And I'm thinking about, boy, I wish I had a paper bag full of your 20 pre-1921 Morgan silver dollars. I wish I had a whole bag of those.
Well, I remember when I first started in college, my rationale for studying political science was because I really wanted to understand why government didn't function. It just seemed to me that there were people I was listening to as a young, teenager, and they espoused interesting ideas, but somewhere between what they were saying and what happened in Congress and the laws that eventually got passed and how we actually interacted with them once they were finally to fruition, there was a world apart between them, and I couldn't quite figure out what the problem was. And actually, I had a political science professor. He kind of explained to us the gap between, if I said to you, write a law that prevents the following problem, and you illustrate that law, you write it out, then you try to present it to Congress, and somebody says, well, I'll vote for it, but I really don't like this part of it, so I want to tweak it to this, and then maybe I'll add this little piece of it if you'll agree, and then I'll go ahead and I'll vote for you. But at the time the law gets passed, it's completely different from what the original intention was. And then it has to be actually, endorsed and used in the real world. So how does the police officer that has to enforce it or the law enforcement agency actually deal with it on a day-to-day basis with people? And does it really go back to what the original intention was? So I began to understand that there were flaws, in the political process. Later on, I got to understand that there was a much bigger problem, and that was the manipulation behind the scenes of money. And the fact that there were powers that had come to understand that, hey, screw all these political guys. They come, they go. They get elected, they last for a few years, they're gone. But if we can control the money, especially the mechanism of creating it and determining its value, well, as it was said, you give me the power to create money and regulate its value, and you can pass any laws you want. I am the king of your world at that point.
You remember what Rothschild said, give me control of a nation's currency. I don't care who makes the laws.
I don't care, because they came to understand that in the background, that all of this manipulation of congressional law, was like playing checkers against the guy playing chess. Because if they controlled the money system, they controlled the world. So the infiltration of the efforts to control money in America dated back to the original end of the Revolutionary War, and it perpetuated itself further. We were smart enough at the very beginning to say, we're going to establish a system, but we're going to limit it to, let's say, 20 years. So we created a bank charter in 1792 with a 20-year expiration date. The idea being that you and I could look at it 20 years later and say, how'd they do? Are we satisfied with the way they've conducted themselves? Have they sustained the value of money over that 20 years? Are we happy with how government is financing itself? And if the answer was no, we had the option to not renew the charter and basically wipe the slate clean and start wipe the slate clean and start all over again.
We get that. Yeah, wipe the slate clean.
Wipe the slate clean.
I know it's early, Fred. I know it's early. So the thing is we have history, okay? The United States government has history. Other countries have shown us. I mean, they're right now de-dollarizing the peso in Argentina. Javier Milei just came out this morning, and now it costs 800 pesos per dollar instead of 360. I mean, it's economic shock therapy on the economy down there because he's trying to make a big change. And this reminded me of Weimar post-World War II.
Oh, my goodness, yeah. I think we talked about that, so at the end of the Weimar Republic, the currency system had gotten so bad, there's the old story, of course, of the wheelbarrow full of money left out in front of the store, and the guy stole the wheelbarrow and left a pile of money. It got so bad that they would actually measure money there by volume. They would look at the size of the pile of money and say, okay, you have 3 cubic feet of money. That's worth X. They didn't count the money. They didn't look at the denominations. None of that mattered. You just simply looked at the square footage of the volume of this nonsense, this worthless paper. But that was an experiment that went so far awry. But it points out something that even the U.S. has experienced since its beginnings, which is wars cost money. and they cost a tremendous amount of money that usually ends up getting financed. And somehow, if we don't make that money back, we end up with piles and piles of debt. I mean, it goes back to, in my days, it was the Vietnam War that was so expensive. It ended up requiring that Richard Nixon, as president, take the gold standard off the U.S. dollar because the debts had piled up so much. They simply couldn't sustain a gold standard anymore. We've experienced wars since the 1990s that were supposed to cost $1 billion, $2 billion, ended up costing years and years and trillions upon trillions of dollars, none of which the government had the ability to pay for. So it all ended up on the big pile of debt. And as we continue moving forward, here we are now at the end of 2023 with a government that's carrying $33.7 trillion worth of debt. What's funny is I think the credit rating agencies finally woke up in the past couple months. It's like those guys were hiding under the blankets, and suddenly one of them just woke up and said, hey, what's going on over here? This is getting a little out of control. And little by little, they're all beginning to line up and beginning to, poo-poo the dollar, which you talk about de-dollarization. I think one of the biggest threats the United States public faces is if the world or the public itself loses confidence in the ability of the government to sustain its debt obligations, because that weakens the U.S. dollar going forward. And there is nothing substantial supporting the value of the dollar except this psychology that we all share. We're all buying into the same premise. But if anybody wakes up and says the emperor has no clothes, we're in for kind of a shock.
Well, of course, and if the system goes awry and we end up with EMP or the electric grid goes down, the medium of exchange that goes with it, because you were pointing out technology earlier, Fred, all that technology and the medium of exchange and the store of value and standard of value is not going to matter. People are going to be looking at hard goods. And I make the circular sign with my fingers for those of you watching us streaming, because of the fact that that round circle represents a coin or some sort of intrinsic store of value that people are going to have to. And this is every time they've done studies. Economics guru Bruce Bartlett did a study and found out, and this is during the Reagan years, that all of a sudden they were trying to figure out, how are we going to get a hold of these flea markets, and how are we going to control all the underground economy? And every time we raise taxes, it drives people into the underground economy. I mean, it's a given. In every country they looked at, Chile, it doesn't matter. Every country that they studied, every time they raised taxes, the underground economy just exploded. And so, people in America need to realize the same thing is happening here, which is one of the reasons why people need to start looking at numismatic, junk silver, and all that good stuff, which is why you have answers to questions if people would just pick up the phone and call you at your toll-free number.
Absolutely. And we'll be happy to educate people on how to do this. I realize for a lot, it's a big conversation, and it takes a little bit of thought process to kind of get your head wrapped around. First of all, accepting the notion, is there a flaw with the current system? I don't think many people would argue that that is the case. I think we've experienced it enough this year, because when things get out of control, first there's this massive amount of money that gets printed. And you and I seem to understand this clearly, and I'm very thankful for that, that when they create that additional money, we are diluting the value of existing currency. This is the only reason why these huge deficits and debts are important to an average American. Most people don't care whether their government carries debt or not. But when it begins to impact their life, then it becomes important. And it impacts our lives as Americans, because every time the government has to print another dollar, it's adding into the economy more diluted currency. And it's inflating the value of the money that you and I have to earn. You and I cannot go back into our basements and print money when we run out. We have to labor to earn it. We have to invest. We have to do some work. We have to do something to produce that capital. But the government can create it at will, especially when it has a central bank behind it that says, don't worry what you spend, we'll print more. It's what we used to call the Doritos solution. Spend all you
Jay
want.
Leno, don't worry, we'll make more.
Not a problem.
That's
so
for you.
The government doesn't feel the impact, but you and I do. And I think this concept of gold and silver coins was so simple, so straightforward. And imagining an economy where the electric grid drops, I could see people using simple silver dimes and silver quarters to be able to at least conduct commerce with people on a short-term basis if that need arose. But meanwhile, for those that have wealth, owning physical gold and silver coins at least provides a counterbalance to this perpetual weakness in paper. So for those that are thinking 5 years from now, I mean, we have problems today, but imagine what we're going to look like in 5 years. And by the way, if you think we spent and printed money in 2023, wait till you see what we do in 2024. They are going to create more money than anybody is prepared for. And the rate of inflation, whether it's visible in the consumer price index or not, is still there behind the scenes. And I think the public owes it to itself, knowing this is coming, counterbalance your wealth with some physical assets. Gold and silver coins are a perfect method for people to put away money today that actually will retain buying power over the years to come.
I got a question for you, Fred. People are going to pick up that phone. They're going to call you on your toll-free number. For those of you out there, I keep telling you to have a pen and paper by your phone, by your radio, to take down phone numbers because you need the information. You got to have the data. You have to know what's going on.
You're so
Fred's
old
number.
School, pen and paper.
I can't help myself, because if electric is gone, that's what you got. Pen and paper to take notes with, 800-878-2646. That's why Fred has commercials running on the Power Hour, because of the fact that he is concerned about the safety and security of Americans. This financial disaster, I mean, we just talked about the Doritos syndrome, about printing more. I'm concerned because of the fact that leading up to the 2024 election, we're really going to see some big economic shifts in America. It's going to get really damned serious out there. And if people don't start looking at their finances right now and starting to make plans, food, water, shelter, guns, ammo, and start coming up with some sort of medium of exchange, whether it's barter goods or whatever the case may be, gold and silver are right there at the top of the list, because when the dollar is gone, and that means your medium of exchange, your ability to go to an ATM to get money out of the bank, money that basically, and I don't know if you've read the bank rules. Fred knows what the bank rules are. When you put your money in the bank, it's now the bank's property. It's not yours. They have a credit and a debit, a balance sheet, and they got assets and they got liabilities.
And we certainly learned early, this spring, we learned very quickly that the banks do not have the volume of money that people think they have. So, as redemptions occurred on the standard banking institutions, the rate and rapidness of the withdrawals took the entire banking system by surprise. People were shocked at how quickly people moved literally billions and billions of dollars out of their accounts, because we now have the technology to do that. But we also learned very quickly that the banks do not carry the kind of capital people think. The old school mentality was, you thought you walked into the bank and deposited $1,000 and they loaned some of that out, but you could come back and get your $1,000 anytime you wanted. Well, the truth was they would loan your money out effectively 9 times over and over again, the fractional banking. So, 90% of the first 1,000 gets loaned out, then 90% of that 900 gets loaned out, and so on, until eventually the bank has actually loaned almost 10 times the amount that you've deposited, and those loans are floating. Now, if they get paid, everybody's happy. But if they don't, or if people come in to redeem their capital all at once, there certainly is not sufficient amounts of money. So if we have to create all the capital we need to support the banking system, we've learned very quickly how fast this can implode. So even if the dollar doesn't completely implode to the point where it's worthless, or even if the banking system isn't 100% shut down, I still think there's a stability problem in purchasing power. And we're beginning to experience it because the inflation has been so high this year. Every American who's gone into a supermarket since the 1st of January has experienced some sticker shock. And I think it's going to get a lot worse in 2024. So I like the idea of Americans trying to protect themselves. I think the big picture of us trying to, let's say, rally our listeners and say, we need to do something about this. This is out of control. The government needs to correct the course, or we need to remove the Federal Reserve banking system, or we need to go back to a gold and silver standard. I don't know that any of those options really are viable. We can push for them. We can hope for them. But I think in the end, it's going to be up to the individual American to take responsibility for their own personal finances. I don't think we should count on the government to come and protect us or solve this problem. Election year notwithstanding, I don't see any candidate that has presented a viable solution to $33.6 trillion worth of debt and $1 trillion or $1.5 trillion in interest a year. I don't see that happening.
Yeah, see, this first hour of the show, we were all talking about responsibility. We were talking about the fact that people need to rise up and look. you can all think, oh, Y2K, and look, nothing happened. It's okay. You want to be irresponsible. It's okay. I get it.
A lot
many of
happened
us
in
have been
Y2K.
looking at.
A lot did happen in Y2K.
The last quarter.
The companies ended up spending the billions of dollars that nobody thought they would spend to create the new computer systems to fix the problem. But that created a massive amount of inflation in stock values that created a bubble and an eventual crash. So, it's not as if that was a non-event. It wasn't the event I think a lot of the conspiracy people who had gone over the edge were predicting. And even today, there are people come up, you must hear them on a regular basis, who think the world's coming to an end next week because of some exogenous event. And yet, year after year, I'm going on 40 years in the business, we're still here. And I think we'll still be here in the years to come. But I do think there is this sense of personal responsibility that has somehow drifted away. And people need to recapture that and take that liability and say, okay, if I can't count on my government to protect my wealth, I better damn do it myself. And I don't know any other way better than owning physical gold and silver. If anybody wants to call and chat about this, you've mentioned our 800 number, 878-2646. We will be happy to educate people and provide that physical gold and silver coin portfolio to our clients and listeners.
Yeah, well, the one thing I wanted to point out about Y2K is in the fourth quarter of 1999, there was a big uptick in consumer spending, and a majority of it was for durable and hard goods, food and all that stuff. People were stocking up in anticipation. This is the very same thing. History repeats itself, folks. And the thing is if gold and silver was not part of your portfolio, I mean, I'm a big junk silver collector, but there is some numismatic value out there in holding it versus, if you've got this portfolio out there, gold this past couple of weeks and silver, I've seen some serious fluctuations. There's been a little bit of
2,100 for about 10 minutes last Sunday. That is the nominal highest price it's ever been. I think if you account for inflation, it's not really the highest price gold's ever traded. I think if you go back to 1980 when it hit 850, that would be almost 400 in today's 4,000 in today's dollars. But this price that it hit 2,100 and change on Sunday night was a breakout, and I think it's an indication of where we're heading. And again, it's partly due to what's beginning to become a growing trend, which is this second guessing of the future value of paper money given the current circumstances. At least people are paying attention. They're listening to the fact that the government is carrying this much debt, and the fact that it's alarming not only the politicians, but the Federal Reserve themselves, and of course the credit rating agencies. And let me tell you, if somehow we make it through 2024 without a downgrade of the dollar, we'll be very lucky. But if any of the credit rating agencies take that AAA number off the U.S. dollar, it is going to tank against other currencies and spike the prices for gold and silver dramatically.
All right, so let's talk about the investments. You got 3 holiday specials out there. You want to explain what those are?
Yeah, we love the holiday specials.
I was going to get to that.
Every once in a while, we try to put together something. I always look for holes in the market. So I put together a couple things that are really palatable for an investor. They're fun for gifts for those people that like to do that, but they're just good buying opportunities. So backed by popular demand, as I've been referring it to, it is a box of 20 of the pre-1904 silver dollars, the Morgan dollars, 1878 up to 1921. There was a gap after 1904. And then the last year, 1921, is actually the most common date of the entire series. So if we take that date out, the ones I have are actually 1904 all the way back to 1878. They're all graded and certified in top condition, mid-grade, MS-64. They've been graded by a third-party independent service called NGC. And then after they've been graded, I had screened through over 1,000 coins to hand select these really top-end quality grade coins. So we put 20 of those together in a box. That's 20 graded MS-64 silver dollars for $2,300. Then I also had a package for 2 gold pieces. They are the $5 Liberty Head gold coins, struck between the 1870s up through around 1906 and 7. Most of these are going to be early 20th century, around 1904, and they are MS-62s, and the 2 coins together for $1,450. And then I added one thing that was just a little unusual, and that was the last regular-sized 1-ounce gold coin minted in America was a $20 gold piece. And it was created as a regular 1-ounce gold coin issued up to 1933 starting in 1907, this particular design. The last year of the series, the 33 itself, is the coin that holds the record for the highest single valued coin ever. $18 million for that one coin, 1933-20. And I have a group of these, obviously not the 1933 dated one, more of the common dates, but we went and found a couple of them in MS66, which is an incredibly high quality grade, $4,100 per coin for those. Great way for a long-term investor to accumulate gold. And those are our three holiday specials. They are on the website at US Coin Capital, CAPITOL, uscoincapital.com, under the tab for store. Again, feel free to call. You can purchase them right on the web, but we'll be happy to talk with anybody who's interested in looking at those as well.
Right. But you also sell junk silver. And,
absolutely.
All that, the quarters, the dimes, the nickels, all of that, the half dollars, the silver dollars.
Yeah, I mean, people can accumulate, so people can add a little to their pile from time to time. And, if their psychology shifts and they become a little more fearful, they can add a little bit more. The nice thing about junk silver is it's really flexible. I mean, you could have a full bag, which is about $22,000, $23,000, and trade it as a full bag. Or you can literally deal with a single dime or a single quarter at a time. And if need be, if anything really went awry, I could easily see how if I went to a supermarket and no one was taking paper dollars anymore, and I'm trying to buy a couple bags of food, I might be able to negotiate with some real silver quarters. There's something pure about actual gold and silver that, you put it in a person's hand and they sort of get the idea that this is real, this is solid, it's actual money. It's not a representation of something else. It is the something else. And that's the thing I think people are missing.
Well, I want to talk about the bounce back real quick while we have a minute left before we go to break, Fred. And the bounce back is that if the dollar, if what you say is true, that in 2024, they're going to start spending money like a drunken sailor in a strip club and printing money like it's, and they're trying to devalue everything. And I don't know what their end game is other than to crash the economy. I don't know why they would do it, because that would literally, you get it. And
I think it's what you said before. It's all about control. So if I could keep perpetually running to the system where I've got you chasing like, the rat in the wheel. So you're constantly fighting just to stay afloat. You don't have much time to come back and look at all the other crap that's going on. You're paying attention to what you have to. So I think it's a control issue.
Yeah, it is. And the thing is, that's why you need, I got out of the markets, and I'm putting my money in gold and silver now because we, the people, eventually are going to lose faith in the almighty dollar. Fred Dashevsky, thanks so much for joining us. USCoinCapital.com. We'll be back with more after the break. Stay with us.